Hi, everyone. My name is Dustin Miles with Momentum Multifamily. I'm excited to have Elijah and Melissa here today. Welcome you both, and would love to learn more about you guys. If Elijah, maybe if you want to introduce yourself first, then we'll go to Melissa.
Sure thing. Appreciate it. Thanks for having us on, Dustin. Melissa and I are with GoldHawk Capital. Melissa's our VP of Investor Relations, and I'm a managing partner at the firm. We are direct investors in multifamily deals, and then we also make introductions to much larger investors for our sponsors as well with our equity placement business. So we do a few things, but we really focus on the multifamily middle market. These are deals anywhere between $3 and $50 million. And we are reviewing about 100 of those deals every single month and then selectively choosing which ones to either invest in or to share with family office relationships.
Great, awesome, and Melissa, love to learn a little bit more about you.
Hey everyone. Yeah, I'm Melissa Day and VP of Investor Relations, and I'm just really excited to be part of the GoldHawk team. I'm very passionate about working with investors. I love uh, just communicating with them and sharing good information with them. I feel that communication is just so important in this business, and I'm really excited about what Elijah has created with GoldHawk because being selective in reviewing those multifamily deals really gets you the top 1% to look at.
Awesome. Well, sounds good. Well, I guess we'll just kind of dive right into it, and appreciate both of you for being here. So kind of, you guys are, and I've taken a look at your checklist and love that. Would love to just kind of, you're reviewing a lot of deals. What's some of the, what are you guys looking for? What does your box look like? And yeah, we just kind of dive into that a little bit more.
The longer that we do this, the more simple it gets. There's a lot of
Mhm.
metrics and ways to
Yep.
complicate it and hundreds of points that you can put on a due diligence checklist. But it really boils down to a few important things. The first being the operator's experience. So we ask for the track record and we like to see that they've executed at least five full cycle exits. That means they bought and sold or refinanced at least five times to prove that they can do it. And then that gives us confidence that they can do it again. So that experience piece is definitely the most important thing. You can have a bad deal that gets saved because of good operations, good operator, or you can have a really good deal that gets ruined because of an inexperienced operator. So we really focused on the experience. The second thing is basis. So we want to make sure that these deals are being acquired at a decent purchase price. It needs to be competitive with the market. It needs to result in positive cash flow in the first year. Obviously, on some of the heavier value add projects, that cash flow comes later once the business plan has been implemented. But just in general, for our core plus and our most common strategy, we are really looking for deals that cash flow from day one. So your going in yield needs to be higher than the amount of money that's going to the bank every month in the form of interest. So that's really important for us. Then comes the stabilized yield. So once you've implemented your business plan and raised the rents and did the renovations, did all that stuff, what do the cash flows look like? And what do the investor cash flows look like at that point? Usually we're using like a year three like NOI to try to figure that out.
Yep.
And so we want to make sure that the value add or the effort that was put into it was actually worth it, and that the yield that the deal is producing is essentially commensurate with the risk that we took to get into the deal. So it's really those few things: the experience of the operator, the purchase price, the cash flow in the first year, and then the cash flow stabilized. And that's really what we look for.
Awesome. Yeah, it makes sense. And then I guess kind of backing up a little bit, would love to learn. a little bit more, Elijah, about your background and just kind of, how'd you kind of get into this? Did you start out in single family? Like what, do you have an investment background or finance background? Would love to learn a little bit more about your background there.
Sure. So I was in college and I thought I wanted to go into banking or hedge funds because that's where all the money was made. I realized after doing some internships that I was not interested in that at all. It's a miserable life. And I watched a lot of YouTube videos and stumbled upon a few channels like Bigger Pockets and a few others, and realized that I wanted to be a real estate investor.
Mm.
So while I was still in college, I got a few buddies together, my cousin and my best friend, and we pooled our money and bought a really crappy little single family house in Orlando, Florida. And
Yeah.
we fixed it up a little bit, put a tenant in there. Actually, like never saw the property ever. We had someone up there on the ground doing that for us, and that's how it all got started. I raised money from day one from friends, family, coworkers, and investors. And so by the time I graduated college, I had a few of those. And then I got a job at a REIT, so a real estate investment trust, essentially an analyst level position,
Gotcha.
where I was doing a lot of asset management and underwriting and stuff like that. And learning for 4 years at that job. Meanwhile, I was buying apartment buildings on the side with investor money and coworker money and friends and family. Built that portfolio up and then ended up leaving that job to do it on my own. At which point I realized that I really dislike operating rental properties. So
Gotcha.
came to that realization and decided I'm going to focus on what I'm good at, which is underwriting and raising money. And so I essentially pivoted my business to just be capital raising for other operators. And that's still what we do today. We raise capital for other operators. We invest our own money. We invest our investors' money. And then, we just rolled out in the past year this equity placement business where we're going after much larger checks from family offices and institutions to capitalize the deals.
Okay. Awesome. That's great. Yeah, I can kind of relate. My background's in engineering, and so I would, as an engineer by day, and then was doing multifamily on the side at night. So definitely relate. Melissa, I'd love to learn a little bit more about your background and just kind of and kind of maybe a little bit more about your role at GoldHawk.
Sure, of course. Well, I've always been passionate about real estate, even in college. I went through an entrepreneur program, so I've always been entrepreneurial. And, I did the regular track of being a licensed realtor, but I was never that regular residential realtor. I always was working with investors and developers, everything from fix and flip all the way to small projects. And I actually eventually transitioned to working directly with a sponsor in an investor relations role. So I really understand how the sponsors work and how they consider deals, underwrite deals. And I've seen both good and bad operations too. So I know exactly what Elijah's talking about the experience of the operator. It's really important. And for me, being in investor relations, again, I mentioned communication. I think it's just very important to have transparent and clear communication, consistent communication, and that's where my role really comes into play, both in the communication between GoldHawk and our investors, but also in interacting with sponsors and just making sure we have reporting and just good, clear, regular communication to our investors.
Awesome. That's great. And in terms of, and Elijah, I don't know exactly how long you guys have, Goldhawk's been around and just how long you've been doing deals, but is there anything that for you guys has kind of shifted from, the past few years? You had certain criteria and you said things are getting simpler now. What is, anything that kind of pops out to you that's kind of changed over the past few years, especially with, deals getting a little more challenging and or a little bit tighter on cash flow due to interest rates going up and things like that. Anything that kind of changed underwriting wise for you guys?
our business and our approach to looking at deals has completely changed in the last few years. I'd say like 3 years ago, we didn't have the deal flow that we had now. And so, we were carefully evaluating every little deal that came to us and pursuing many of them, just because we didn't have a lot of options. We made a decision to stop focusing on bringing new investors in the door and focus more effort on deal flow. And for about 6 months, I was just only focusing on making relationships with sponsors and trying to get as many new deals in the door as possible. A lot of
Mm,
that was using LinkedIn and email lists as well,
yep.
to the point now where we're reviewing 50 to 100 multifamily investment opportunities every single month that are under contract and looking for equity. And so our approach has gotten a lot more, I'd say, conservative, because we're trying to weed out 99% of those deals so we can only
Right.
present the top 1%. And another thing that's changed massively in this industry is a lot of people got burned with those 3-year bridge loans and some of those shorter term debt products that had variable interest rates.
Mm,
Those were scary, and a lot of people ended up losing their money. And so we've gotten a lot more conservative with the debt on these deals. So just to give you an idea on like some of our criteria, it's like we like to see that there's at least 5 years of fixed rate debt on these deals. Our investors want to see that. When we get pitched a deal with only 3 years of bridge loan, it just significantly increases the risk profile. And we know that it's risky because a lot of our investors have been invested in other people's deals throughout the years that ran out of term on their loan, and they ended up losing all their money, which is
yep.
sad. So we've been really conservative about that. We really like to see a lot of cash flow on day one, going back to the discussion about how we want that yield, which is represented by a cap rate going into the deal. We want that to be higher than the interest rate that's on the loan. Essentially, it's a proxy for cash flow, and
Yep.
it tells us that there is a low risk of defaulting on that loan. And for us, for our personal investments, we like to see 5% investor cash flow in year one. Well, to get that, you really need to have your cap rate be at least 50 basis points higher than your loan interest rate, and the competitive deals are 100 basis points higher with the going in cap rate compared to the interest rate on the loan. So that's something we really look for, and that weeds out a lot of deals. We're not looking for any ground up construction right now, because we believe that you can acquire buildings for a lot less than it costs to build them. And we're very specific in the markets that we look for too. If the deal is in a more tertiary location, there must be significantly higher cash flow to compensate for the risk of being able to exit that deal, because there's less buyers for those tertiary markets.
Yep.
Newer buildings are very popular with investors now. A lot of that older inventory, older than the 80s. So you're talking about 60s and 70s inventory. The maintenance on those and the insurance costs and everything associated with them is just, it can be ridiculous. And so the investors, the family offices and the institutions and the people with the money are not really considering those types of investments right now. And so, when we get pitched those, the returns have to be significantly higher to justify that kind of risk with taking on those deals.
Yep. Yep. Yeah, I understood. Um, is there, are you guys pretty agnostic in terms of parts of the country? Are there certain states or metros that you guys particularly like, or what does that look like for you guys?
For our personal investments, we love the Sun Belt region, and more of those warmer and politically conservative states. They tend to
Mhm.
be better for real estate investors. And then our family office relationships, they'll look at deals anywhere, usually in primary or secondary markets. Now there are a few locations that are kind of off limits just because of the political landscape, making it almost toxic to investors, and that would be certain areas of California, the Pacific Northwest, and then like New York and New Jersey. Although there are investors for these areas, it's just there are far fewer people who are willing to take the risk with those political environments.
Gotcha. Okay. Interesting. Um, in terms of just goals for for GoldHawk and what do you see does what does this year look like for you guys and maybe if maybe the next few years, however you want to take it, but I would love to kind of hear about where you guys are heading.
Sure. Well, with Melissa's help, we are hopefully going to be closing 3 or 4 more deals for direct investment this year. That's
Awesome.
when we actually go put our own money into deals, and then we invite our limited partner investors into the deals as well. And usually we're writing checks anywhere between 500,000 and $2 to $3 million, depending on the deal and who's interested. And then on the equity placement side, our goal is to make 2 to 3 of those transactions as well. So that would be, larger checks, anywhere from $3 to $50 million equity checks, where we're just making an introduction, and then at closing we get a fee for that. So that's really the goal there in the short term. In the long term, this business is turning more into a really small boutique real estate investment bank where we do a lot of services like underwriting and preparing transactions and sourcing capital stacks and executing transactions, which is more than just sending an email to a family office saying, will you invest in this deal? So it's
Right.
it's it's going in that direction where there's more of like the services that are being provided to operators and investors. And then I'm also really interested in having, a discretionary fund of funds, because right now we're investing on an individual deal basis where
Mm-hmm.
the deal will come to us. We'll evaluate it. If we want to pursue it, we'll go raise money for it. It would
Yep.
be nice to have a pot of cash, maybe a couple $100 million, that we can go discretionarily invest in deals that we think are good without having to go raise capital every time. So that's on the horizon as well.
Gotcha. Okay. And Melissa, I'd love to just hear about some of your I guess more day to day or how interactions have been with investors, or maybe some of what was your typical day look like in the IR role.
Okay, no, great. Well, lots of calls and conversations with investors,
Yeah.
answering questions, fielding those, and presenting deals. And what I love is, I mentioned before, I'm passionate about real estate and specifically real estate investing.
Yep.
Mean, everybody always asks, well, what's the risk? And in any
Right.
investment, your money's at risk. It always is.
Mhm.
But what I love about what we're doing is we are minimizing that risk by being very
Right.
strict with the criteria. And what's great about real estate is there's an asset behind it. There's something
Mhm.
behind it. It's not something in the cloud. So I kind of can geek out about talking with investors about, what their goals are, what they would like to see for their future. And so just really connecting with them at this point and just building that relationship. Because as we build that relationship, when they start to get familiar with what GoldHawk presents, when we send out particular deals that we're raising for, they're going to have that confidence because they already have a relationship and a trust built with us. So that's kind of my world, is just building on that relationship and the trust and being a good resource to answer questions.
Awesome. And then just curious, any interesting questions that you've gotten from investors, or I know I've gotten a few that are interesting. So yeah, I just love to throw that out there for you.
Hmm. I've gotten lots of different questions. A lot of times it's really about how we're analyzing the deals, and they really want to know why we are specifically focused on like specific criteria. But
Mhm.
when Elijah laid it out, it makes sense, right? It's very obvious that most people would want that same buy box. I get really weird questions, off the wall questions about tenants. I mean,
Oh,
I'm sure you have too, being in
yeah,
multifamily.
yeah,
I mean, or how do you handle that? I mean, we've had a weird situation happen with a tenant, so then investors are calling us about, well, we heard that that happened. How is that going to affect things? I
right.
actually went through COVID with three multifamily assets and having to report to, the family office and pref equity investors. And people asked a lot of crazy questions about, collections and
Yep,
rents. And that
yep.
sort of things. And, you have to deal with the evictions, right? So you're actually working hand in hand with the property managers, right? So that's their world. It's not our world, but investors will ask questions about that too.
Yeah. Okay. Got it. Yeah. I had one question, or I've gotten this multiple times, but they were like, well, what happens if you die? Which is, it's fair question. So,
I
I'm like, well, that's, got a business partner. So, and we have some staff and all that too. But, well, great. Well, I want to be respectful of y'all's time. Really appreciate you guys being on here. I have one last question, and then we'll kind of depart and all that. But is there a book, podcast, or quote that either or both of you guys that you really enjoy or was really impactful for you?
Go ahead, Melissa.
Well, I guess one of my favorite short quotes is, you miss 100% of the shots you don't take. So I've always been one to just go for it, or the answer's always no to the question you don't ask. So
Sure.
those are two things I live by.
Yeah. Awesome. For you, Elijah?
Yeah, yeah. So my answer to this question is stop spending all your time reading books. Yeah, at some point, you need to go actually do a deal. So like spend more time grinding and trying to like get a deal done, and because you're gonna learn way more in the transaction than you would in the book.
Yeah.
So you don't need to like learn how to do real estate for 3 years before you go and do it. Maybe go learn for like a few weeks or a month, and then start going after deals.
Yeah, and like you mentioned earlier in a few of your stories, you can read all you want about raising capital, or you can go do it because you're going to iterate, and it's kind of trial by fire a little bit too. So, um, awesome. Well, appreciate y'all's time. And how do people get in touch with you? How do people invest with you? What's the best way to contact you guys?
Yeah, you can add us on LinkedIn, Elijah W. Brown, Melissa E. Day, or you can go to our website at goldhawk.us. And if you do goldhawk.us/LP calculator, there's a free download for anyone listening. These are for LP investors looking to calculate some of the same metrics that we use to analyze deals.
Awesome. Well,
Awesome.
sounds great. Yeah, appreciate y'all's time. Look forward to connecting again soon and have a great day. Thank you guys. See ya.
Thanks,
Take
Dustin.
care.
Thanks, Dustin.
Bye.